South Island company Mascot Finance is the first finance company to collapse while covered by the government's deposit guarantee scheme. To discuss the implications of Mascot's demise, I'm joined now by Bernard Hickey of interest.co.nz. Hi there, Bernard.
Good morning.
So what do you see as the implications of this relatively obscure company being the first to be under the guarantee scheme?
Well, it puts the spotlight back on the Treasury's running of this scheme and whether or not they should have allowed everyone to get the guarantee. It was a really tough time in October when they brought this in and said basically everyone who wants it can get it. And as we feared, some of those who got it weren't stable, and Mascot was the first of those. If they'd looked a little bit more closely at Mascot, they would have found that it had already stopped taking investments and stopped lending and was already in trouble. And ironically, it got the guarantee and didn't have to pay anything for it because it didn't add to its deposits. And this is another sign that really we shouldn't have the deposit guarantee scheme in its current form once the scheme expires in October next year.
So how many other Mascots are there, do you think?
Well, there aren't that many of these property finance companies left. It's the property financiers, the pure property financiers, who are in most trouble. And most of those collapsed before the guarantee started. So the Hanovers and the St Lawrences, they had gone before the guarantee came in place. And we have to be thankful, really, that the timing of the guarantee was after many of the big ones collapsed. So there aren't that many big ones left, although there still will be some who fall over. There's just too many of those finance companies that were given government guarantees.
The amount of money that the government will raise from the scheme, though, will that be sufficient, do you think, to pay out depositors in this case?
Well, yes, they've already raised over $80 million in fees from the banks who had to pay for it. And this is what really makes the banks grumpy. They had to pay to ensure, effectively, the deposits of the finance companies. And in fact, Mascot Finance didn't pay a cent for its protection, and neither did the depositors underneath it. So there's a sense of unfairness there, particularly amongst the big banks.
But do you think this one's just snuck in under the radar, in a sense, that for the rest of the scheme's life, do you think it'll run relatively smoothly?
Well, the trouble was there was no radar. Everyone came in, and that's the cause of the problem, really. There will be more that fall over, and Treasury have acknowledged that, but whether they'll be really big ones, I doubt it. And we just have to hope the government now plans for a transition out of the deposit guarantee scheme, because that's the key thing.
To what, though, do you think?
Well, that's the question. Should they scale it back to smaller deposits, for example? $1 million protected now, maybe it should be a much lower figure. Or should you have a deposit insurance scheme, like we see in some other countries, where the true risks are priced? Because at the moment, the finance companies aren't paying for that protection. The banks are.
OK, thanks very much there. Bernard Hickey there from interest.co.nz. Stay